Okay. So, Jay Powell, the Federal Reserve meeting today, and not too many surprises, but let's cover the interest rates and the tightening situation because it is happening. It's happening. Um, yeah. So, pretty much, Jay Powell's like, there's enough job openings that we feel comfortable doing what we said we are going to do. So they're going with the taper. It's happening. The interest rates, he's like, maybe we'll raise interest rates later. We'll take a look at the rates, the markets, Bitcoin. Please like, share, comment, subscribe, and yeah, let's. Well, first of all, the Fed does not control the interest rates. That's a bunch of BS. Let's look at interest rates are based on growth expectations and inflation expectations. That all trades out in the bond market. The interest rates are the dead opposite of where the bond market trades, period. The Fed doesn't control it. And actually, like any attempt they do to like try to control it, they're wrong like half the time anyway. So never listen to what they say about interest rates ever, or whatever they try to do to control it. It's like either they're just fully BSing or they just don't have control, even if they're trying to. Not investment advice, as always. But anyway, here's the TLT. This is the Treasury bonds, the U.S. Treasury bond trading. And so we have a borderline breakout looking thing here. And just very basically, if we go this way, interest rates are coming down, and we could do that. It's trying to break out. Here, interest rates are going down. Here, they're going negative, regardless of what the Fed says. But the Fed is saying that they think interest rates are going up, which means bonds will trade down here. So if we're in this kind of zone in a month or so, then interest rates will go up. Like if we're around here, maybe they'll announce a raise. Like they didn't announce a raise here, so probably have to go past there. So anyway, that's the bond trading chart. You can double check what's going on with the bonds by looking at the Eurodollar futures, because this is the international bond trading. And the Eurodollar futures are making a down move. So this is suggesting that it's trading in the direction of interest rates going up, but not a lot. I mean, it's almost flat. It's just made a little move. And it does that a lot. Like, it'll flat out, look, it'll flat and go back to zero, flat, go back to zero, like, whatever. They don't know which way these are trading. Who cares about their guess? They don't know. Anyway, that's the interest rates. But the Fed tightening is happening, and it's happening pretty quick because it's like early March. They're going to be done with all asset purchases. They're going to bring all the asset purchases down to zero in like a little over a month, which is fast and pretty aggressive. And then they're going to talk about tightening and taking stuff off the balance sheet. So yeah, that is happening. Let's look at the market, because what usually happens in the market is with like a Fed kind of tightening cycle is like the announcement of the tightening cycle, you get a little pullback, but then you like bull until you get like near the end of tapering, and then the market starts crashing, and then they have to like change the whole plan. So for right now, on the S&P, we're getting that initial pullback into the taper stuff. Today, there was no reversal on the plan, so the market's just doing that first trading thing. So, I mean, I think we're going to find a bottom here pretty soon, probably. Probably by the end of this week. And, well, see, I think we're just here. Like, I think we're in this little wedge area, and we could have an entirely boring, like, February, just, like, in this wedge. I think that might actually be most likely. Let me go to an hourly and see what this trading pattern looks like. Oh, it's totally just a bear flag. Okay, yeah, this is just a bear flag release. So I think we're actually going to come down farther. But where would we go to? I don't think we'll like flush out like that like this week. Ooh, that would be Anyway, who cares about my prediction? We're just looking at the technicals. Oh, whoops. Kicked me back to the daily. Anyway, I would assume the most likely thing is just to kind of consolidate in the boring area here, but the chart looks kind of nasty. And also we have this this false stab here. Like I saw a bunch of people saying like, oh, this is a dead cat bounce or something like that. Like, that's not a dead cat bounce. Like, a dead cat bounce is relative to the whole topping pattern. Like, you have this whole topping pattern. A dead cat bounce would be like this. Like, it would be a bigger thing than one little green candle that finished near yesterday's lows, you know. But what this is, what you get this huge tail down like that, that's a bear stab. And what often happens after that move is you just kind of roll over and you chase it down and you go past it. So we're probably doing that, actually, after zooming in on that a little bit. But I mean, if we just go into the middle of no man's land here, I don't know. There's not much to trade off of. Anyway, it does look like we'll probably come down a little bit farther before we do a bottoming pattern. So we'll check in later and try to figure out where that is. But yeah, the S&P for now, unless it does decide to flush a bit, we're just in here. And on the NASDAQ, we are in quite a similar range. It's a little bit more bearish, but similar kind of little wedgie shape. And same kind of thing, like if the NASDAQ flushed out, like this is a pretty solid downtrend. Like, that's pretty solid too. The S&P, that mid-channel is pretty solid. And this downtrend line on the NAS is pretty solid. So like flushing underneath this would be suspect, I think. Would be suspect, and I would be probably closing out any non-crypto kind of short positions immediately if that happened. Let's see. So, right, we did treasuries. The IWM has been interesting. It's been totally dumping, and there's a lot more wiggle room for where that could go. And so that makes it kind of interesting for kind of random stocks. But oh yeah, everyone's talking about gold breaking out. Gold is just in the down channel. Gold rejected off the top. Gold is not breaking out yet, but it may. Like, once we get this bottoming pattern, like the rally that we get during the whole Fed taper tightening thing over the next several months, like, we might not see, the high risk stuff rally, but we may see something like gold and silver rally. And I've covered that in a few videos. Like, we're rotating out of high risk, rotating out of tech, and we should be. I mean, we have rotated it into energy. Like, oil and stuff has been bulling like crazy, but we haven't really seen like basic materials, miners, minerals, all those sorts of things come in. And when you're getting close to the end of a credit cycle, a big bubble, the everything bubble, like, that's what you would expect to bull last. To the top of the bubble is those things. Miners, minerals, materials, sort of commodity plays, infrastructure. And this is the rotation that might be happening right now on this Fed tightening cycle, as we might be pulling out of all the super high risk stuff. And then the next run should be those things I just mentioned. So anyway, anyone that's saying gold is breaking out, it's not. Well, not yet. And silver looks pretty good. It's a good chart. Like, silver is holding this channel. It is running on this bubble trend, and silver actually looks pretty good. Oh, talking about silver, before I go to looking at cryptos, this this is like a high volatility silver miner that I was talking about a few times. It just dumped from 10 to like 3 in a day. And there was a news that came out that like 30 or 50% of Gato's like silver mines, they don't have them. So that wasn't good news for this stock. So yeah, in any case, looking at maybe a silver play or something, you have to be pretty careful about the miners that you're choosing, because that's definitely a high risk one. AG's been around for a long time, has very good management. MAG, I just started looking at, and Discovery Silver is a tiny junior discovery one that has super high momentum. That might be an interesting one. It has the most bullish chart I could find in silver, as far as miners and discovery and stuff goes. But all of these are Canadian companies with mining in Mexico, which should be good jurisdictions for the next couple of years or whatever the trading window is here for the silver run. Yeah, okay. So anyway, let's look at Bitcoin, because this thing is doing a technical pattern that I like to call ugly, super ugly, which is you jump on top of a downtrend, you cross over, and you get trapped underneath a worse downtrend. So it's a descending wedge, and this is affecting every crypto market, and it's affecting all of the miners, pretty much any crypto-related asset, Mara. There's a wedge like this on almost every one of those charts. I'll just look at Bitcoin now. But this is very close to a rejection area, and if we break this neckline, I totally expect this to flush. I have 14K on April Fool's Day. That's my target. But if we don't break down, if we break out of here, then I think the 70 mid-year kind of area would be back on the table. But that's not what I think is happening at all. I think we're stuck under here, and we're going to cross over this wedge, which is going to be an ugly waterfall looking thing. That's what I think Bitcoin's going to do. And also, BTC, I don't like calling BTC Bitcoin anymore. If you go look at my whole Craig Wright, Satoshi Nakamoto, Bitcoin Black Swan playlist, go look at my playlist on the Bitcoin Black Swan that's coming. There's a ton of legal action coming at Bitcoin. And yeah, the Fed tapering situation is probably not good for Bitcoin either, because all of the new money coming into the market is now not coming in here. Like, there's not new money coming in, so Bitcoin's not getting all the bank money. And then all the legal action that's being pressed right now, like everyone that has done any kind of illegal stuff with crypto thinking that their transactions are secret or something, they're idiots. It's a public ledger system. Courts can go directly to miners, and you can look at transactions, you can freeze assets, you can move stuff. Like, that's not how it works. So yeah, I mean, people that have been doing money laundering or drug trafficking or stealing stuff, if you're stealing bitcoins, like, you can get caught stealing bitcoins and get them frozen and taken back. Or human trafficking stuff. There's all kinds of people that have been doing these things using crypto, and they're going to be in for a huge surprise over the next couple of years. And I think there's a wake-up call coming a little bit sooner than that. But yeah, go look at Theory of Bitcoin videos, look at my Bitcoin playlist, and understand how Bitcoin actually works. It's not encrypted at all. It's a public ledger system. The hashing and encryption in Bitcoin is simply for scaling purposes and distributing the hashes. That's not how it works. Yeah, so anyway, Bitcoin is the huge thing. I think that's the number one risk asset that's at the most risk right now. But there's a ton of other stuff that is looking sketchball. Like Tesla, maybe a wedge pattern, stretching it a little bit here, but we're in sort of a wedge topping area where Tesla's kind of trapped under a downtrend here. Totally capable of flushing to the downside. But we have to see, how this Fed taper affects the market, because it shouldn't be crashing stuff until you actually get farther, like towards the end of the taper, which should be mid-year, March, April, something. But Tesla's going to have to choose by March which direction it's going. And there's some other things. yeah, like this thing has already done a wedge kind of crossover. It's almost bottoming on ARC. Yeah, so that was the general idea, is to say that I think that we're going to get a sort of bottoming pattern maybe this week, and that's like the initial pullback into the taper. And then I think we should get a little rally here. So we'll keep track of that and try to figure out where stuff is trading. But I definitely think that BTC is leading the danger sector. Like I think if the S&P rallies or whatever, I think BTC is still in big trouble right now. I don't know what else to cover. That'll probably do it for this one. I just basically wanted to say that the Fed really didn't change much, but that's a big deal because it means they're actually tapering. So, not investment advice. Good luck, and be careful with this super high volatility and like pretty dangerous market at the moment.